Welcome to Module 4, Market Analysis. In this module, we have three key learning objectives. First, identify and draw support and resistance levels. Second, construct trend lines and channels to find market direction. And third, use volume analysis to track smart money. In this session, we are going to master the art of reading price charts. By the end of this video, you will be able to identify where price is likely to stall, how to spot the overall direction of the market, and why volume is the secret ingredient to confirming a move. Let's start with the foundation of technical analysis: support and resistance. Imagine a floor and a ceiling. In trading, price rarely moves in a straight line. It bounces between invisible levels. Support is like a floor. It is a price level where a downtrend tends to pause due to a concentration of buying interest. When price drops toward support, buyers see a bargain and step in, pushing the price back up. As you see here, every time the price touches this lower line, it finds support and heads higher. On the flip side, resistance is like a ceiling. It is a price level where an uptrend tends to pause because sellers start to outnumber buyers. When price hits this ceiling, it struggles to break through, and we see a sell-off. Identifying these zones is your first step in predicting where the market might turn around. Now that we understand the concept, let's talk about drawing these levels effectively. The biggest mistake beginners make is trying to find a single, exact price point. Think of support and resistance as zones, or thick bands. Notice how the price doesn't always stop at the exact same cent. By drawing a zone that encompasses the highs or lows of the candle bodies and wicks, you account for market noise. The more times a level is tested and holds, the stronger that level becomes. 1 touch is a fluke, 2 is a pattern, and 3 is a confirmed level. A fascinating thing happens when price finally breaks through. When a floor is broken, it often turns into a ceiling. This is known as a role reversal, and it is one of the most reliable setups in market analysis. You now know how to draw zones and recognize when their roles flip. While support and resistance are horizontal, the market often moves diagonally. This is where trend lines come in. Our goal here is to identify the market's primary direction. In an uptrend, price creates a series of higher highs and higher lows. To draw an uptrend line, we connect at least 2 of these higher lows. This line acts as a diagonal support. In a downtrend, we see lower highs and lower lows. We draw a downtrend line by connecting the lower highs. This acts as diagonal resistance. When we have a trend line and a parallel line on the opposite side, we create a channel. Channels show us the bounds of the market's current momentum. If price is hugging the top of an ascending channel, it might be overextended. If it touches the bottom, it might be a buying opportunity. You can now construct trend lines and channels to visualize market direction. Finally, let's look at the fuel behind the price: volume analysis. While price tells us where the market went, volume tells us how much conviction was behind that move. Volume is simply the number of shares or contracts traded during a specific period. It is usually shown as vertical bars at the bottom of your chart. Institutional investors, or smart money, trade in such massive quantities that they cannot hide their tracks. Their activity shows up as high volume. If the price is moving up and volume is also increasing, it means big players are buying in. The trend is healthy and likely to continue. However, if the price is rising but volume is shrinking, be careful. This suggests that smart money is no longer supporting the move, and a reversal might be coming soon. This is like a car trying to drive uphill while running out of gas. You now understand why high volume confirms price action and reveals the presence of institutional traders. Let's bring everything together in a quick review. First, we covered support and resistance, which are zones of buying and selling interest. Second, trend lines and channels help us identify the market's diagonal path. And third, volume acts as the confirmation of institutional smart money. In this module, we learned that support and resistance act as the floor and ceiling for price. We saw that connecting the peaks and valleys allows us to draw trend lines and channels to see the market's direction. Finally, we looked at volume to ensure that the moves we see are backed by significant buying or selling power. Open a chart and try to find 3 support zones and 1 clear trend line. Take a moment to look at a live chart and see if you can spot these patterns yourself. In the next module, we will combine these technical levels with specific entry and exit strategies. Great job completing market analysis. You've now got the tools to start reading the story the market is telling through price and volume. I'll see you in the next session.